Bank earnings season is upon us, giving us a look at financial conditions following the collapse of Silicon Valley Bank. JPMorgan kicked it off with a big beat in the first quarter and raised its fiscal year net interest income outlook to $81 billion. And Brad, we're seeing all these bank stocks up across the board, and the vibe is like, well, maybe March didn't even happen. Maybe there was no big bank turmoil because a lot of these banks, JPMorgan including, calling out strength in card services, strength in certain parts of their trading businesses. Now, we did get a little bit of a warning from Jamie Dimon. He loves his weather references, saying that you need to be mindful of storm clouds on the horizon. But by and large, the market is liking these results from JPMorgan and many other banks, and they were pretty good. And I would say somewhat surprising to see a JPMorgan, always a little bit conservative, come out here and raise an outlook for net profits after a month of banking turmoil. Absolutely shocking.
Yeah, he is quite the economic meteorologist when it comes down to it. And of course, in the financial conditions that we're assessing with all of these major banks, you have to look to a few things here. And even as he was talking about what they're monitoring for potentially higher inflation for longer and thus interest rates, the inflationary impact of continued fiscal stimulus and the unprecedented quantitative tightening and geopolitical tensions, including relations with China and the unpredictable war in Ukraine. All of those matters considered, you have to look across where they did see some of the most massive growth in this most recent quarter and where going forward from here they're going to expect some tailwinds to be able to ride at least in this kind of storm cloud scenario that they've continued to monitor from JPMorgan's side. And particularly, you could probably look no further in terms of the biggest growth category for the company that they saw in this most recent quarter. On net income, consumer and community banking rose by 80% year over year. Why do I bring this up? We think about all of the regional bank turmoil that had taken place and ensued in the tail end or midpoint of March, and what that meant for the quarter as it came to some of the confidence in the broader banking system. And that's where you're going to hear a lot of commentary from all of the major execs. And it already has started to roll in and trickle out over the course of this bank earnings season, but how they're going to try to reassure and confidence in that banking system as well. And particularly here, even as we're looking through that revenue line item for consumer and community bank, bringing in $16.5 billion. That was up 35% year over year. And so if there's anything that you can kind of extrapolate from that, it's that the big banks, in times of turmoil for some of the regional banks, they tend to see even more of those fund flows, even more of those assets head their way. And of course, it continues to come back to this question of too big to fail or not. But still, there needs to be some type of concerted effort. And JPMorgan was one of those when it came to First Republic Bank as well, which I know we'll talk about a little bit more later on the show.
The strong get stronger. But investors have a really, I think, this is a challenging one to interpret. Do you reward a JPMorgan, and we'll talk about Wells Fargo in a second, and a Citigroup for the quarters they just had, which were surprisingly strong, Brad? Or do you lock in on what Jamie Dimon said about likely tightening financial conditions?
Right.
Because when you hear something like that from a major bank, a leadership bank that has one of these fortress balance sheets like Dimon talks about, you have to wonder, what is the outlook for economic growth? What is the outlook for the consumer? Retail sales under pressure this morning. We'll have more on that later. But when you see that call out of tightening financial conditions, it's a little bit worrying, and you have to wonder what these banks saw in the first quarter. Is it as good as it's going to get this year?
Here's one interesting thing to do a hotkey on for all of these earnings reports that come throughout the bank portion of this earnings season. Just Control F or Command F, depending upon what kind of device you're on. Deposits. Deposits were down, actually, within some of the firm-wide metrics that they provided. They were down by about 8%. That was something that was also mirrored when you look through Citi's results as well. Deposits, even within Wells Fargo, and I know we're going to break them down in a moment too, deposits are going to be key to look at with relation to where confidence actually did play into some of the results or the lack thereof in that confidence, play into some of the results as a result of what took place with the banking crisis and turmoil that ensued at the tail end of the quarter as well. And so deposits, one of the direct corollaries that some investors can probably get some type of insight into how it even affected the big banks that are starting to report.
Let's pivot here, Brad, to Wells Fargo here. A decent quarter from Wells Fargo. I do want to call out, they had weakness again in their home business, again weakness in their auto business as a result of higher interest rates impacting that company, as many other companies have called out too as well. These bigger ticket purchases under pressure. Wells Fargo saw that as well. Did have some also weakness in investment banking. That investment banking more broadly in the financial services industry continues. Deal making has ground to a halt. Not that bad of a quarter for overall for Wells Fargo by and large. Now, I did get a chance to catch up with Wells Fargo CFO Mike Santomasso on there was a media call, Brad, earlier this morning. I asked him if he's seeing tightening financial conditions. He hinted that that might happen, just like Diamond called out. We could see his statement on that screen to Yahoo Finance earlier on. But by and large, consumers continue to spend pretty briskly. Now, I also asked him in the same breath, I asked him to do one of those analyst tricks, lump two questions in one breath.
Sure.
I still got it. I'm still pretty good at doing that stuff. I'm like, are you a buyer potentially of regional banks? Do you see yourself as strong enough? He declined to comment, but you have to try, Brad, once you get these people on the phone.
Yeah, anytime you get a little bit of their ear, of course, it's great to just lob those questions in.
I didn't ask him what he had for breakfast, though.
Well, it's always interesting to know what they're having on a big day like this.
Probably nothing.
Maybe not really. Maybe nothing, exactly. But they did say, looking ahead, they're continuing to move forward on some of the risk and control agenda. That's their top priority. They're kind of pinning that as, and also mentioning that they're looking to develop some improved product and services to serve the customers right now in communities. But it's also going to come down to where, for each of these banks, they're continuing to assume risk, whether that be in the loans that they take on, whether that be in some of the bonds that they hold on to as well. And that's something that has continued to come up in our conversations with everybody who's monitored some of even as we were speaking with Gary Cohn earlier this week, one of the noted kind of heads of a bank previously who had to weather Goldman through the last kind of great financial recession as well, and was at the bank during that time, and just kind of spelling out what was taking place there. And then just a quick hotkey on deposits. That was down year over year as well.
Yeah, I do want to, real quickly, just again, go back to that auto call out. Auto sales is down about 12%. We heard from earlier this week when CarMax reported too, really, just a bad quarter in all things autos. And as you start to think about the rest of earnings season, start to put some of these pieces together. Wells Fargo, weakness in autos. CarMax, weakness in autos. What does it mean for Ford? What does it mean for General Motors? What does it mean to an AutoNation? That's how you should be thinking about using a lot of these bank earnings.